What if I told you right now the media is telling you not to buy the stock, even though billionaires are buying it up like crazy? How did one of the biggest healthcare companies in the world lose $120 billion in one day? And what could that mean for your portfolio? And is the downfall of this stock happening because the tariffs is out of control? Well, this fall just might mean the opportunity of a decade, or maybe an opportunity of your lifetime. So we're going to go after 3 stocks that may be the best investment you can make and how you can profit from them. Because the rich, the elite, the wealthy, they're buying these stocks, but the media, they're telling you to go away. So who's manipulating who? The rich or the media? But we'll go over those 3 stocks today and how we can steal our finances. It is the meaning of the word manipulation. We know what that means. It's when one set of individuals make a narrative, change a story, create malcontent and disruption that has you making a decision that you might regret in the future. Well, this is happening right now to a company that we all know, love, or might frustrate us sometimes, but we all know. And that is the rental car company Hertz. You see, they filed for bankruptcy back October 2021, and it sent their stock roaring down. They was as high as $25 a share, and they went down as low as $4. That is a 90% decline. Over that time, the media told us it was a buying opportunity because it was going down. One of the largest rental companies in the world was going to rebound. But as that stock went down, we lost money. So why is it now that the media, the ones that control TV, are telling us it's a bad buy? At the same time they're saying that, we have multiple billionaires snatching it up like crazy, to the point that last week, Hertz almost doubled in price, going up by 98%. $100,000 in Hertz would have made you $98,000 in 1 week, while the media is manipulating you as if it's a bad buy. So why did Hertz go up? Well, this upward movement was primarily driven by the announcement that Bill Ackman's Pershing Square Capital Management Group, yes, that Bill Ackman that 3 weeks ago cried on TV saying, no, the tariffs are horrible, even though he was a champion of the tariffs when they first got announced in February. Again, manipulation is happening right before our eyes. But he announced that he acquired a significant stake in the company. According to his regulatory filing, Pershing Square purchased 12.7 million shares, approximately 4% of Hertz, which also makes up 20% of Bill Ackman's company in totality. Meaning, for every $100 you have in that fund, $20 is going towards Hertz. That is a big bet on Hertz going up. And this signaled to Wall Street and other billionaires that Hertz's future is in good hands, leading to increased investor interest and optimism, sending that stock soaring. The stock's performance last week reflects that the market is now positive with these new developments, even though media outlets are saying it is a bad buy. Again, manipulation at its finest right in front of us. You had one person who talked about how great the tariffs were, and then as the market goes crashing down, is crying about the tariffs needs to stop. At the same time, when he's saying that, he's buying shares of Hertz, a company that's going to be affected by a negative way when it comes to tariffs. Manipulation at its finest. Even though Hertz lost $2.8 billion in 2024, he saw this as an investment opportunity, while the world, the media, is saying how it's a bad investment. But billionaires, the rich, the wealthy, the elite, they drive the stock market, and they drove Hertz to go up, being up again by 98%. Hertz is still a leading provider of rental cars across the world. And though they filed bankruptcy 5 years ago, and though they got smacked over the head, the rich, the wealthy, and elite saw it as an opportunity, and you should look at Hertz as well to see if it's an opportunity for you. Because the media is manipulating you, but the billionaires are saying this will continue to go up. To get back to $25 a share, do 3 extra investments. So Ackman is thinking that billionaires, the rich, the wealthy, the elite are thinking that, should you? Now we have a stock that went down horribly, and that is UnitedHealthcare, being down by 22%. And UnitedHealthcare stock decline was due to them reporting higher than expected medical costs in its Medicare Advantage business, leading to a reduced earnings forecast for the year 2025. They had one number that they was going to make, but because they're not making as much money in Medicare, it's going to go down. This is aligned with what's going on with the government and the cuts to Medicare. You see, campaign promises can be promised, but when they come into effect, it hurts us as consumers, it hurts companies. When companies lose money, their stock goes down. When companies lose money, they charge you more. We have less money, our spending power goes down. This combination is horrible when it comes to healthcare companies, because I just won't pay my healthcare bill, or I'll just be uninsured. That hurts everybody, and that hurt United Healthcare, hence why the stock went down. And it might not get better, but again, manipulation at its finest, because you had some talking heads on TV saying that it's going to continue to go down, but you had other talking heads on TV and also stock analysts saying that the lower valuation is a potential buying opportunity. United Healthcare is one of those staple stocks in the Dow 30. When those stocks go down, they typically don't drop by 22% in 1 week. They typically don't lose $4 billion in 1 day like UnitedHealth did. So they view this as an opportunity, given UnitedHealthcare's strong market position and their diversified healthcare services, because they don't just do Medicare. They do private insurance. They do group insurance. They also do forms of life insurance. So because they're diversified, some analysts believe this is a buying opportunity. Something's down by 22%. If it gets back to where it was, that is a 32% gain. And United, they are a major player when it comes to health insurance. Public sentiment, some positive, some negative, about the company after the CEO was assassinated in broad daylight, causing some individuals to speculate people aren't using United Healthcare and canceling their service because of the negative light it showed on their company. Dow 30 companies do not drop by 5% over the course of a week, definitely not 22%. Another investment opportunity we might want to look at is Nike. And they have been going down like crazy. They were up last week by 4%, but they have dropped by more than 50% over the past few months. And it's because of declining sales and tariffs. Inventory challenges as well, missteps. You see, it was a poll done by Nielsen's 2 months ago asking individuals that were 25 and less, would they be okay with buying imitation shoes? They also did the same poll with individuals in between the ages of 26 and 40. You know, 70% of people polled in between 26 and 40 said they would not want to buy imitation shoes. People 25 or below, 84% said they would not mind buying imitation shoes. Meaning, they would wear fake Nikes, fake Adidas, fake shoes because of the cost, not because of the authenticity. Is that going to help Nike or going to hurt Nike? Nike is in trouble. And the tariffs do not make it better, because a tariff is a tax on Nike and on a consumer. 4% of Nike's manufacturing is done in America. I repeat, 4%. That means if it costs them $5 to make a shoe, with the tariffs, that is going to now be $22 to make the same shoe. Nike is already expensive. With a 300% increase, does that mean they're going to sell their shoes by $400? Of course not. So what's going to happen? Profit margin is going to go down, which means they will not make as much money and their stock is going to go down. And if we're the consumer, don't have as much pocket share, not as much discretionary income, then we're either going to buy those imitation shoes or not buy new shoes at all. And that means Nike sales are going to continue to go. Now, because of the pause of tariffs last week, Nike saw an increase of 4%. But guys, they're still down by almost 50%. If the tariffs aren't paused, if the trade war continues, Nike is in deep, deep trouble. So this could be an investment opportunity of a lifetime if the tariffs discontinue. We find a way to get in good with China and stop the trade war. Nike being down by 50%, that is a 100% gain. And everybody is going to be happy about that. But what if the tariffs continue? What if the trade war is not an end in sight? You think Nike's going to go up or it's going to go down? Even though they are the global leader and they have navigated periods in the past of financial wherewithal, these short-term challenges is either going to hurt them or be a bump in the road because of the brand that they have built over the years. So, what we going to do, y'all? Hertz up by 98%, UnitedHealthcare down by 22%, and Nike up by 4%, but still down by 50% from its peak. Investment opportunity or things that we can short? Investing is the key. Just because the market's down doesn't mean you should stop investing. When the market's down, that is when we make the most money long term. Do your research. Don't be scared of investing and have yourself a plan. As always, love is love. Let's make some paper profits together, y'all. Peace.